let's get to it. As everyone knows, Nvidia earnings is tomorrow on February the 26th after hours. The markets are anticipating the prices to move somewhere around 8 to 12% either way. And I'm going to show you guys a way to make 30% off your capital at risk. Around 12 o'clock, February 25th, we are somewhere around 1 day and some hours out from the Nvidia earnings call. Going into earnings, I got this pretty cool play for you guys that will net you guys somewhere around 30% no matter what Nvidia does, as long as it doesn't break out of a 12% range on either way. Put it up right here. It's a website called Option Strat. Pretty cool. So what you're gonna do is you're gonna sell the 145 call. You're gonna buy it back on 146. Then you're gonna sell the 113 put and you're gonna buy it on 112. As you can see, the maximum amount you're risking is $67, and if it stays within this range, you're gonna make somewhere around $32. So the total risk is around $1. You're gonna put on $1 for this, and out of that, if it prints, you get $32.50 back. So that's roughly 33% return for no matter what Nvidia does, as long as it stays within 112.68 and 145.33. This is your range of profit. Now, if you're feeling a bit more, I don't know, risky, but a bit more neutral, you can narrow. Well, there's a couple things you can do. You can either extend the wings, and you could make a little bit more profit that way. But then you'll be increasing your risk profile, so you'll be risking somewhere around like $500 to make $134, which, actually think about that, you'll be making a little bit less if you do that. But yeah, you could say you're decreasing your risk by doing this, because this allows you a greater range of profitability by increasing the wings. Now, if you feel like Nvidia really won't move that much, or you want to skew it a bit, you can bump this thing up to like 120, and that should increase your risk reward profile. I gotta shrink this back down to like $1, and now you're risking somewhere around $100 to make $47, which is, I want to say 17% more than the previous one. Or you want to ratchet this down from 145, and you think Nvidia won't really go up that much afterwards. You can just adjust this and play as you go with this. But for my range, I really think Nvidia should stay within 145 and 113. So I'm just going to put this back here. 145, 113 Iron Condor should net you a good 30% returns on each spread you put on. Alright, the next play is a bit simpler to set up, but it's a bit harder to grasp. So if you really think that Nvidia is going to stay below, let's just say 130. I'm a bit bullish because I am long on this stock. So let's say Nvidia stays below 130. You want to sell a 130. Let's say it stays below 130 after earnings, and around 130 at February 28th, which is this Friday. But then you think it's going to go up afterwards, which I think is probably going to happen. It might go up, might waver a bit, so you could change the expiration date on the second one to maybe April. I don't know. So you sell the upfront 130 call, and then you buy back an April 130 call. What this does is that it allows you to collect a premium, the juicy premium on earnings week right here, and then you can use that premium to mitigate the back 130 call. So you're betting the stock is going to stay at or below, stay around 130, but not too far from it, which I believe is highly likely to happen. It's probably going to stay within, what's the profit range here, 120 or 117 and 147, with right here expiring you get the most. So if it expires around 130, you make the most money, but then also you break even as long as it doesn't go outside of 117 and 147. So it wanders around and then it goes up later. Too bad this thing doesn't really show you, but there you go. Greatest profitability is around 130, it starts to taper off from there. This is what you called a calendar spread. This is a little bit more varied on what you can make from this, but it should net you a decent profit if Nvidia does hover around a bit before earnings and then it goes up after earnings. That's all. So hopefully there's some neutral plays that can put some extra cash in your pockets before when the market's on a downturn like this. Right now it's starting to hold steady. That's all, folks. I'll talk to you later.